Hey, this is Uncle Dan. I'm reviewing a top 5 list of the biggest winners of a portfolio from a famous trader on Reddit. I've reached out to him and he's agreed to share with me some of his trading data. And what I'd like to do is to go back and try to validate the trades. Were they really done? And then look at the variables around the trades to see if there's anything we can learn from this. Now, he has a set of rules that he says he uses, and I'm going to look at these trades to see whether he applied his formal rules in those trades and whether that all syncs up. And then we can see. Okay, this is Mori 226's top 10 list of I want to be a millionaire too. Rule number 1, keep 50% of your cash dry. Rule number 2, don't put more than 25% of your capital in any one stock. Rule number 3, you buy options, you don't sell options. 10 to 15% out of the money in 1 to 2 months to expiry is perfect. Rule number 4, the Greeks, don't overpay for options. If the implied volatility percentile is over 80%, you're paying too much. Rule number 5, let the winners run. Don't take profits too quick. You need to make multiples of your losers to end up being profitable by the end of the year. And rule number 6, cut your losses early. Don't sit on your losers. Rule number 7, the trend is your friend. Stop trying to pick the top. If the market's going up, it's going up. Rule number 8, manage your emotions. Just focus on the winners. Don't beat yourself up when you have a losing trade. Stay positive. That's how you're going to win long term. Rule number 9, you got to learn the Greeks if you're going to trade options. You got to know what theta, delta, and you got to know what implied volatility is. And how are you going to do that? Rule number 10 is you're going to watch Uncle Dan's top 100 options videos. That's how you're going to win. And then we can see whether we can potentially use some of his rules in our own trading if, in fact, we can validate that his trades are real. You know, as I always tell you, no matter how long you've been in the markets, you should always think of yourself as a student. You should always be trying to evolve your strategies. You can't have one set of rules forever. The markets constantly change, and you have to evolve with the markets. So this is an interesting exercise for me. I'm doing it. I figured I'd go ahead and record it. You guys leave comments down below if you find this interesting as well. I'm just going to do the top stock today, and then I'll see if you guys are interested in me documenting this and sharing it with you. If I'm the only one who's curious about this, then I'll just keep doing it for myself. But if you guys can benefit from it, I'm happy to record this. Hey everyone, it's Uncle Dan. It's the weekend. It's July 26th. And we're on to day 3 of Mori 226's Millionaire trading strategy. The last 2 days, we looked at his 2 biggest winners, the first being Amazon, the second being Nikola. And then today we're going to look at his 3rd top winner, and it looks like he went back to the well because he jumped back into Amazon again, that crazy stock. Now here we're seeing live trading or live streaming of prices from back on April 13th. Okay, and it's 9 minutes before the close. Streaming prices, top performer in my quote list anyway, Tesla up 13% to 646. Boy, it seems like it was forever when that stock was trading in the 600 price range. And then here was Amazon, 3rd top performer of the day, up 6%. Here's the chart of Amazon on that day. Huge move up. We had not yet made an all-time new high. Now, Mori says that he especially likes to buy into stocks that make all-time new highs. It's interesting, he picked to go in on this day when the stock had yet to go up and make an all-time new high. So he was obviously anticipating it would go up there. But hey, this is a crazy trade. Let's go through it. The net effect of this trade, he made $154,000 on a $32,000 investment. So he made 5 times his money. And he did that in 2 days. This is crazy. So let's go see, is this trade for real? This is forensic science right now. We're using the ThinkorSwim on-demand platform. We are actually streaming live prices from April 13th. The market's closing in a few minutes. Let's go find his trade. He did the 2320 strike, okay? And here it is, low of 8, a high of 19. Now he went in and bought it at $13. So what we're going to have to do is to go and pull up a chart of this particular option and see if we can find that particular trade he did. So here we're trading in a range of high of 1311, a low of 1018, and that was 204 contracts. Here was 2, 204. Here was 8. Here was 11. Now, it looks to me, if he did trade in this price range, look at this. Okay, it's just by coincidence. He theoretically could have traded right in here, but look what I found. Just a small little trade, 25 contracts traded at 13 exactly. So this must be his trade right here, because that's like one of the few large bars in the volume. Now, theoretically, he could have been in this batch right here, 204 contracts. It did trade around his price. But I'm going to guess, and it could be either one, but I'll bet you this is him right here. So he went in at 2:21 p.m. 2:21 p.m. he went in on that stock. Now, I'm kind of curious. I don't know if you are. But like if I'm going to go look at Amazon, what was going on at 2:21 p.m.? Let's see. It was right in here. Okay, so we had a big run up during the day. Tesla and Netflix are outperforming Amazon up here on the top left. So right in here. Okay, so he waited for a pullback and got in right here, 2:21. Interesting. So he decided he was bullish. He waited for it to pull back a little bit, and he paid $13 for those. So we found the trade, so we can validate that he definitely could have bought 25 contracts at 13 on that day. Now we're going to hop one day ahead and take a look at what happened to the stock. In fact, he gets out in 2 days' time. So here is right on the close, with 5 minutes to close, the following day. And look what happened to his option. His option, which closed around 20, it's got shot up to 58. And look at the stock. So the stock's breaking out. Let's go back to the daily now. Wow. So now we're breaking out to all-time new highs on Amazon. Let's take a look at the options. See what the implied volatility is. Let's go back again one day. One day after he bought it, the implied volatility is 47% when we break out to new highs. What was it the day before? So the day before, just before the close, what was he looking at? The day before, 4 minutes to go, the implied vols actually were 43%. Now he bought it at 220, so now I'm curious. I'm curious what was happening at 220 with the implied vol. So we actually have the power to go back intraday and see what the implied vols were right when he went in and bought this thing. That's the power of this platform. Is that crazy? I can go back to a specific minute in April and show you streaming prices. I used to sell platforms to banks and broking houses, and if they wanted to do something like this, I would charge them $50,000 a month, and it would not have this functionality. So this is a really powerful tool. But let's take a look. The implied volatilities at 220, when he jumped in here, was actually trading at 41%. I wonder if we can see if now he was actually probably the bid in here at this time. Let's see if we can look at the market depth. So here he is. It's just crazy. I'm showing you his bid, okay? This is crazy. Right here he is. He's put in a bid at 13 for 25, and the offer is at 13.55 for 8 contracts. ThinkorSwim platform was a little bit of a lag, but can you believe they have this data? They actually have the depth of market from 3 months ago, and I can actually see it. So look what just happened in there. So he just got hit at 13. Did you see that? Okay, let me go back again. Let me go back a minute, because this is kind of interesting. This is pretty wild. Let's go back 1 minute. Okay, here he is. Okay, now here's the depth of market. We can actually see his bid in here at 13.25, and the platform shows that he did a 2 lot and then a 23 lot. So we're watching him. The stock's at 21.47. The offer's at 13.55. The last traded price was 13.60. We're going to watch someone come in and whack him at 13, and we'll see what happens here. So here we're coming in. Okay, there. Okay, a 1 lot just traded. There's still 24 left. And you can see there's no one else bidding with him. There's no other bids below his $13 bid for 24 contract. Now the stock just dropped $1 to 21.46. Boom. Okay, he's done. He's filled. So now the bid is 12.65. The stock's dropped down to 21.46. He's filled at 13. Okay, that's the last traded price. But look at the implied vol right when he got filled. Okay, the implied vol is 41%. Okay, so that's kind of what happened around the execution of his trade. I'm assuming he got filled in the afternoon and he wasn't a part of that trade that was done earlier at around 11 a.m. I think this is him right here. So with 25 contracts, he's committed $32,517 to this trade. Okay, and the stock is still drifting down a little bit. Now remember the vol. Remember, you want to buy cheap vol. You don't want to buy expensive vol. We're looking at 41%. Let's hop to the next day. 41%, right? 41%. Let's go to the next day. Okay, so the stock's up $120, and look at that call. Woo. Low of 28, high of 63. It's trading at 62. Look at the implied vols. We've gone from 41 to almost 50%. So he's getting direction correct, and he's getting a vol on his side because he's long an option. When the vols go up and you're long an option, you make more money. Now, usually when a stock rallies, the vols go down. But in this case, the stock's making an all-time new high. And now there's some panic in there from short sellers, and people are scrambling to buy back their short positions, and the vols are jumping up to almost 50%. So that's what happens when you break out to an all-time new high. Sometimes you get a vol pop instead of a vol decline. So usually vols pop when the markets crash. Usually vols go down as the market calmly drifts upward. But if you get a spike upwards, that's a different scenario. Now let's look at our quote list up here. Virgin Galactic was up 26%. Tesla was up another 12%. And here's Amazon up 5.5%. So Amazon's not even the top performer for the day. But meanwhile, his Amazon options are going crazy. Okay, so now let's move forward to the next day. Remember the price, it's $22.88. Now we're going to go to the 15th, which is a Wednesday. Okay, so now let's look what's happening. Amazon's up only 1.3%. Tesla's got him beat again, up 3%. There's Virgin Galactic, up 7% to only 20. Okay, so we're seeing Amazon kind of in the middle of the field. The stock's popped up. What's happened to the implied vol? The stock's higher. The implied vol has dropped from almost 50 down to 47.7%. The range is 73.10 to 40 on the 2320 call option that expires on April 24th. So he sold this at 75, which means he did not sell this until later in the day. Mori was saying one of his rules was not trying to take profits on the open or put in trailing loss orders on the open, but to do most of his trading near the close versus the open. So we're going to see if we can find his order. He obviously didn't do it before 2:30. So we're going to shift the time to 3:55 p.m. on April 15th, the Wednesday, and we're looking to try to find that when his option traded through that 75 price. This is just so we can validate that this trade is real, and then we want to kind of understand what was happening around that trade. Is there anything we can learn from his trade? One point is he did actually bet the stock would break out to all-time new highs before it actually broke out. So he didn't wait until the breakout to go in this trade. He actually went in before it made all-time new highs. So here it is. There's 5 minutes left of trading on Wednesday. The implied volatilities, you see what happened here? Okay, it's 47.7, so the vols haven't changed from 2 o'clock. Look what happened here. The stock actually hit 78.95. Okay, so my guess, he talks about using trailing stop loss orders for when he has a gain. But I'm going to guess that if this stock only hit 79, he got out at 75. I'm going to guess that he did not use a trailing stop loss on this. What do you think? I think he took the money and ran. So here is the trade he did 2 days ago. Total option volume on the day was 500 contracts. He did 25. On this day, 263 contracts have traded, and he supposedly sold at 75. Now, let's go see if we can find his trade. It's going to be near the close. Here is a trade for 31 contracts. The high was 75.85. The low was 75. Okay, so there's a pretty good chance that this is his order right here. He traded one here, and he traded another one here at 73, and then 2 contracts traded up at 78.95. So he was out. He's out of the trade. Took him 2 days. His $35,000, he sold it for $187,000. He made $154,561.41 in 2 freaking days. Oh my God. All right, we got to figure out how we're going to do one of those trades. So you can see, he did pay quite a bit for that thing. I mean, this thing was trading for $1. On this day, the high was $3. The low was $3. So you look at the volume in these days. 3, 8, 2, 12. There's no volume in there at all. One contract traded at 305 in the whole day. And then this day, when Mori jumped in, you saw 519 contracts. It went from one contract to 500, then 140, and then 263. Now, what I like to do just for fun, okay, the market's now closed exactly 4 p.m. Let's go ahead and jump one day ahead. Was Mori the master? Oh my God, had he waited another day? So I just want to show you where this stock went one day later. So we broke out. So he bet that the stock would jump and make an all-time new high. He was right. He took profits near the high of the day on the second day, and then the next day it exploded. It exploded up. And there you go. Day 3, trade 3, $154,500 in only 2 days. Let's go. Trade 4 is next.